What's going on, everybody? It's Jeff here. Welcome back to the channel. Happy Friday. AMC right now is sitting down about 5%. As I'm looking at the 5-day chart, it has been trending lower than last Friday's close of that $59 range pretty much all week. But in this video, guys, I want to cover two very important things. One is a new rule filing that just got processed yesterday that I don't see a lot of people talking about. I'm going to cover exactly what it is and what it could mean for AMC. Also, I'm going to take a look at the technical levels. The reason why this is important, and I know some of you guys get sick and tired of looking at technicals, but I'm going to explain to you why it is very important, guys. So stick around. You're not going to want to miss this. Let's get rocking into the video, guys. First off, this is the 5-day, 5-minute chart. And as you can see from last Friday's close, we have been trending down. That Monday was a hard and heavy shorting. They're continuing to short, but we've been trending a little bit lower than that $59 level that we closed. So one thing, guys, I really want to talk about is some of these technical levels. I know Wrench Capital does a great job every single day going over the technical levels, and sometimes it could be a little bit miscued. So in this video, I want to break down a little bit about, like I said, what they are, but why it's also very important. So if you take a look here, I'm going to zoom in a little bit on the 4-hour chart, guys. I know if you look at this little blip, we are a little bit below it right now, but the 4-hour window has not closed yet. This is what is known as a bull pennant, okay? And as you can see, it is getting tighter and tighter and tighter. Well, there's a couple things that can happen when you're channeling inside a bull pennant. First of all, the best outlook, okay, and the most likely outlook is another break to the upside. Well, I know you guys might be thinking to yourself, okay, well, how does this happen? What do you mean? Do automatically people just start buying? Like, what makes this happen? Well, let me break this down for you on why people actually look at technical analysis. Because if you're new to the stock market and you might think, oh, technical analysis, it doesn't make sense. Well, people follow technical analysis to a T for a reason. And that reason is because a lot of hedge funds and large institutions, there might be people behind the desks, okay, that are looking at 6 computer screens. I'm sure you've seen pictures all over the internet, but in actuality, they're just monitoring the algorithms, okay? You heard about stories about Ken Griffin trying to purchase an algorithm from another hedge fund that was proprietary and getting sued for it. And I think it cost them like $100 million. But they create these high frequency algorithms that are all computer generated, and the computer does all the buying and selling for them. And basically what it does is it takes a bunch of different variables, and it's kind of like this: if this, then that. If X, Y, and Z line up, if all these different variables begin to line up, then we are going to buy. If all these different variables line up, then we are going to sell. And what is happening right here is these computers are keeping a very close eye on AMC to see exactly where it goes. That's why you've seen the volume be a little bit lower as of lately. If we get a break to the upside, a solid close to the upside. I'm not talking about a little candle wick. I'm not talking about looking at like the 1-day, 1-minute chart and we get a little breakover. If you're looking at some of these crucial technical levels, such as the 4-hour chart, which is a very well-respected chart, you look at the 2-hour chart where we are trending, okay? You even look at the 1-day chart, okay, right here. Once we can get a solid break to that upside, you are going to see these computers continue the buying and buying and buying, and it's going to give us another leg to the upside. Now, here is the the adverse side of this. Is sometimes when it can break below that channel, and that's where you begin to see a little bit of sell-off from the computer sides that have been holding onto this. But as you know, a lot of the people that are holding onto this are retail investors, and I don't see this dropping to the downside. If you look at this strong line of support we have found on that $53 level, we've bounced off it 1, 2, 3, 4 times. We're sitting at it right now. So I don't see us breaking to the downside, as like I know Wrench Capital talks about all the time. We're in this channel. I see it just continuing in this channel. So I don't see very much of a downside for this. However, the upside is going to be another leg up and a possible break back up to all-time highs, which is going to be a 39% upside. So those are a couple things I'm really looking forward to and closely at over the next couple of days. All right. Also, what I wanted to point out that I didn't see what people talking about was yesterday, was it the 24th, yesterday, They approved DTC 2021-005, and it is to modify the settlement service guide. Now, if you don't know what that means, you can go and take a look at it. I'm not going to bore you with the 115 pages. I skimmed over a little bit, but a couple things I want to highlight, and this is the approval notice. And I think as you scroll down here to page 6, I have it highlighted. Basically what it does is it says this: the settlement guide states that when pledging securities to a pledgee, the pledger's position is moved from the general free account to the pledgee's account, which prevents the pledge position from being used to complete other transactions. So basically, guys, what does that mean? I know a lot of people have covered Ortex and how many shares have been borrowed and then shares have returned and shares have been borrowed. And there's a big misconception on shares borrowed versus actually what shares are shorted. Okay. So what this does is it basically says once a share is borrowed and any type of transaction is initiated, whether they have shorted it, whether they have whatever they've done with it, but once a transaction such as shorting is initiated, you have to follow the complete cycle until it's done. And the reason for this is because of all of the failure to delivers and all of the possibility of synthetic shorts. Because basically what has happened is there's so much chaos going in and out, in and out, in and out. Okay. And some of their settlement has been, oh yeah, we'll deal with it down the road. It'll be 2 days from now, the T+2, which is ridiculous. Okay. The T+2 will deal with it down the road. There's just this whole big mix up. And that's what's caused the confusion. And that's why us as holders and at all the due diligence and the research we have done, we know there's synthetic shares out there. This is going to prevent that. Okay, so this is good news going forward for us. Like I said, everything does happen to take a little bit of time, but all of this is positive news for us. One thing I'm really paying a close attention to, which I always do, guys, is the options chain. And it is vastly changed over literally just the last 20 minutes. There's a huge increase in volume, but one thing, and I wish I had caught this a little bit earlier in the video, guys, but the call volume was insane over the put volume, especially this number. This number was about a 0.24 when I looked at it. I wanted to highlight it, and it changed a little bit. It is getting into later on the Friday of the options expiration day. All right, so there's probably a little bit of change up happening, but there's still a lot of volume coming in for AMC and still a lot of volume to the call side. Okay, so guys, that's going to wrap it up for this video. Close attention to next Monday, Tuesday. Keep an eye on where those levels exactly sit. And I hope that you guys understand a little bit better about technical analysis, why it's important, and why individuals like us, like day traders, like swing traders, look at it. And it all has to do with the fundamentals of the way that these algorithms are built. That's what high frequency trading is, guys. It's a bunch of computers that do this insanely quick amount of trading, and it's all about an if this, then that. So that's it for this video, guys. I'll see you in the next one.